Limited. Mr. Dele Sanusi is already standing by to continue the conversation with me. Mr. Sanusi, good afternoon and thank you for joining the program. It's a new week. The market is starting up in red.
Same already. I'm no more in CBN. I'm now with the rostrum. And
yes, and the rostrum, please. I guess there's a mix-up there. Rostrum Securities. Thank you so much for that. Go ahead.
Thank you. The market, we started the next business, and you are going to see that we won a lot today. They are big cap stock, like Julius Vega is selling, because the first power of this price up is not 2%, is like low. PZ also, sugar, and that those are the ones that are really market down. If you look at the Ghana and total chart, about 51.6, why about 19.2, look their value for the end, toward the end of the market. So all stakeholders went down by 0.4. So that's what happened.
So what's your outlook moving forward? Do you think that to stay this way to the end of the week?
Not really. If you look at what remember last week I said that we are going to have an reaction and markets we are going to have gain, lose, gain. But for this period, the momentum in the market is going to be very high. It's likely that we are going to see, gain, and the market is gaining compared to going down. Market is gaining.
I must thank you so much for your time there, Mr. Dele Sanusi from Rostrum Securities. Thank you and do enjoy the rest of your day.
Thank you, Taylor.
Asian shares market slipped today as worries about U.S. and Chinese growth weighed on sentiment. Though the U.S. and European stock futures did manage a bounce while bond yields came off their lows. Chinese blue chips dropped 1% to 7 months low, having already shed 2.7% last week. Japan's Nikkei bore the brunt of early selling as tech stocks declined, losing another 0.8% on top of a near 6% slide last week. MSCI's broadest index of Asian Pacific shares outside Japan slipped 1.2% after shedding 2.25% last week, while South Korea's market fell 0.2%, a steadier note. S&P 500 rallied 0.4%, Nasdaq features following Friday's slide, Eurostock 50 features added 0.5%, and FTSE features from 0.6%. China's consumer inflation accelerated in August, its fastest pace in half of a year, due to higher food costs from weather disruptions than a recovery in domestic demand as producers' price deflation worsened. This is mounting pressure on the world's second largest economy to roll out more policies amid prolonged housing downturn, persistent joblessness, debt woes, and rising trade tensions. Latest data from the National Bureau of Statistics reveals that consumer price index rose 0.6% year-on-year compared to 0.5%. Food prices jumped 2.8% from an unchanged outcome in July, while non-food inflation was 0.2%, easing from 0.7% in July. Extreme weather this summer, from deadly floods to scorching heat, has pushed up farm produce prices, contributing to faster inflation. And the world's largest aerospace company and leading manufacturer of commercial jetliners, Boeing, says it has reached a tentative agreement with a union representing more than 32,000 workers in the U.S. Pacific Northwest in a deal that could help avert a possible crippling strike as early as September 13th. If approved, the proposed 4-year contract, which includes a general wage increase of 25% and commitment to build the next commercial airplanes in the C2 area, is an important win for new Boeing CEO Mr. Kelly Oberg, who took over last month with a mandate to turn around quality at a plane maker and ensure that deal with labor could help. Now, the first full labor deal in 16 years would also include better retirement benefits and give the union greater input on safety and quality of product system. Now, the workers' union described the new deal as the best contract it had ever negotiated. Aside from the pay bump, the deal offers workers improved health care and retirement benefits and a commitment by Boeing to build its next commercial airplane in the Seattle area. All right, crude oil futures jumped in Asian trade today as potential hurricane system approached the U.S. Gulf Coast and as market recovered from a sell-off following weaker than expected U.S. job data. A U.S. West Texas Intermediate crude sells at $68.57 with an uptick of 1.33%. Brent crude futures experienced an upward price review of 1.27%, selling at $71.96 per barrel. Bonnie Light is down 2.84% and is selling at $78.62. And for the OPEC basket, crude oil dealers are offering $73.68 with an upward price margin of 0.01%. Well, thank you so much. That's our show for today. I'll see you tomorrow, same time. Stay safe, get busy, and make some cash. I'll see ya.